how to trade all-time highs using ICT concepts. In this video, I'm going to go over how to trade them. Right now, data is recording, NAS is all-time highs, and what are you doing? What some things you can be doing to make sure that you're always on the right side of the market. First thing with all-time highs, you want to trade in the direction of being bullish. All-time highs, you don't want to pick the tops. Majority of times, you're going to want to keep on trading higher, and you're going to look for buys. ICT talked about that. You don't want to pick the top, and it's just better for you to keep on trading higher and higher and higher, unless you have a short-term bias. But majority of times, you're just going to want to trade higher. With that being said, when do you know when to get in? When do you know if to buy? The biggest thing is, for me personally, works for me is looking at opening prices for the 1 hourly. And what that will do is give you a short-term discount for you to then buy in that position. So for prime example, this is a 10 a.m. open, right? It is hourly open, right? If you buy any of this right here, you got to remember that if this is 10 a.m. open, I'm using it as the midnight. This is premium, right? This is premium of this order flow. Just look at this. I'm making price fractal. You either want to buy close to that opening price, or you want to wait for some stop runs around that price. So look at this case. This was happened at a twofold, which was we put some equal lows right here. We jolt down, take those lows out, come back, touch, and get into the opening price, right? Come back to discount, and then I was buying in this area right here to target up, and I'll talk about that in another video. But literally bought that up in here, and literally that was it, right? And I knew, and reason that was, I think it was like because I put some more contracts on it, yeah. Something like that. But the idea was basically I knew this was a good trade because we was trading high, going to higher. We was inside macro, and I saw that we swept 10 a.m. open, right? That's how I knew we was coming back in discount. Let's use it for another example. This is 12, right? I'm literally 12 o'clock. I'm grabbing that price and extending at a time. If you buy this, right? Remember, we already talked about on the high time frame, we bullish. We're just gonna keep going higher. We're looking for bullish. We're just trying to wait for good entries. If you buy this right here, notice where you at with the 12 a.m. open, right? We haven't even swept. We barely swept it right here, but we haven't took any liquidity, and we haven't came back down lower yet. So if you buy here, just know that you're in premium, right? Just know that you're in premium of this, again, of this opening hour of this candle. Notice that we come down. No market shift has even happened yet. No market shift has happened yet. We stack these lows right here. We take those lows out. And remember, I talked about how you want to wait for those, wait for us to take liquidity, which is great. We take liquidity. We come back down. Put this high in. Take that high out right there. Now we have a market shift, right? Now we have a market shift. With us having a market shift, it's okay for you to buy that. Put your stop loss below this swing. And you're targeting those highs. You're targeting the highs, right? We're going up higher. Notice how I'm buying. You can either buy near or around, or buy near, around, or below opening, right? Because I'm using this midnight. So when you're buying this, I'm in discount. All we do is come back down to this fair value gap, this bullish fair value gap, which is fine. Or a block right here. Come back in here. We're inside macro, which is the 112. We was inside macro, so that'd be that 1250, 110 macro right here. So buying inside macro and allowing time to push up, right? Aiming for higher. Same thing again. This is me using the 130 open, so you know in the PM session the 130 is the what time the PM session starts. So that's 130, dragging that time out. What do we do? Notice if you buy, this was a decent buy. I think we had 2 o'clock news, so me personally I wouldn't even looked at this, but me personally this would have been a better trade right here. Coming back down, what are we doing? Buying near, right? Buying near that 130 open. So buying here, buying some over here. I was actually trying to take another trade on my live account, but I was looking to get picked up right here at this fair value gap. Say okay, it just stayed bullish, and we just kept on shooting higher. But the idea was we was trading. We came back to the 130, and I literally was seeing. I want to see, do we rip through here, or do we start respecting it because we back at that opening price, right? 130 opening price. What do? We started trading away from it. I'm trying to buy here, and like I said, I wanted to buy one more time. Oh, I wanted to buy in here, get in the trade right here, and that wick, I wanted to come in the fair value gap. It didn't. Okay, and aim for these equal highs right here, right? Because we're in all-time highs. I'm aiming higher. Me personally, I didn't take any sales. You can take sales, but like I said, they're gonna be short-lived, and so you can take, you take sales, but you're gonna want to get in and out of the market even quicker than I want to get in the market, and I'd just rather just go with the trend. So those are ways for you to, me personally, those are ways for me to understand if I'm going to buy, I won't wait for discount, won't wait for something to be ran on the sell side, like so put those lows, stack lows right there, rid of those people, take those people out of the trade. Then we have market shift up, market shift up here, and like I said, I could have bought that, I should have, but I was waiting for a little lower entry right there, and I figured out, but we didn't get it. But the idea is again, was waiting for us to come back to that 130. Like if you buy this, look how far away from here, and we haven't took liquidity. Right, I want to at least take liquidity or be close to the 130 open. And again, this is the idea that I use for trading all-time highs. I try to make it, you try to use price as fractal as possible to be able to manipulate it to at least have some type of discount in us being all-time highs. Right, if that makes any sense. All-time highs, we're already in premium of another premium. So on fractal prices, when I'm looking at this allows me to at least manipulate to where I at least can be in discount of the hourly candle, right? So I'm able to get in better entries. That's how I view it. That's how it's helping me. And like I said, it's kind of like the only thing you can do on all-time highs. Other than that, you can do this. I will put this on here. You can do field projections. If you don't know about field projections, watch the video about that. ICT has a lot of videos about that. I'll probably make a video about that, but these are just field projections of me using that right here, using that standard deviation, using this as a manipulation leg. So you always put this on a manipulation leg, and this is just price targets. But I just feel like this helps you while you're in the trade, but I think this idea helps you get into the trade, right? This helps you kind of form like when should I take profits and stuff like that. And in that case, I'm just using liquidity to my left. So usually I don't have to use this, but it does come in handy if you want to leave runners and stuff like that. So, but yeah, no, I don't want to make this video too long. Hope that was educational. Hope you get some value of it, and see you in the next one.